Joe is a software engineer in Google. He earns $10,000 a month, pays $25,000 in taxes every single month. Now Elon Musk? He earned billions and in some years paid zero in income tax. How? It's not a crime. It's a feature. This is how the rich avoid taxes legally. For most of us, income means salary. It's taxed the moment we earn it. But for the rich, income isn't salary. It's stocks, real estate, companies. We work for money. They let their money work and grow in silence. And the tax system treats these two things very differently. So how do billionaires pay for private jets, mansions, super yachts? Here's the trick. They don't sell their assets. They borrow against them. Say you own $100,000 in stocks. You go to a bank and take a $20,000 loan. You're not taxed because you didn't sell anything. You use that cash to live like royalty. And when you die, the debt disappears. The shares go to your children. No income tax. No capital gains tax. That's the game. Buy. Borrow. Die. Let's say they do sell their stocks or real estate. Still a better deal. You earn salary? You pay 30% tax. They sell shares? That's called capital gains. In India, long-term gains are taxed at just 10%. In the US, it's 15 to 20. Same money. Different labels. Very different tax. Now let's go global. Cayman Islands. Bermuda. Ireland. To you, vacation spots. To them, tax shelters. The rich use shell companies in these countries to hide profits. Say a company earns 500 crore in India, but the profit is shifted to a company in Ireland. Tax drops from 30% to 5%. Maybe less. Completely legal, completely unfair. Real estate is the rich person's Swiss knife. Here's the trick. You buy a building, rent it, earn money, but then you tell the government the building is depreciating, losing value every year. Even if the market value is going up, you make $50,000 in rent, but claim $30,000 in losses. You only pay tax on $20,000. It's called depreciation, and it's one of the most beautiful loopholes in the tax code. The rich also donate, but often they donate to themselves. Here's how. Step 1, set up your own private foundation. Step 2, donate $1 million to it. Step 3, get a massive tax deduction. Step 4, still control how the money is spent. Travel? Funded. Staff? Paid. Family members? Employed. To the public, it's charity. To the rich, it's efficient finance. Ever heard of tax loss harvesting? Let's say you lost money on crypto. 50,000 gone, but made 100,000 on stocks. You sell the crypto just to lock in the loss. Now, instead of paying tax on 100,000, you only pay tax on 50,000. Losing money never felt so profitable. What happens when the rich die? In most countries, the family would owe taxes on inherited wealth. But again, there's a trick. It's called a step-up in basis. You work hard. You file your taxes honestly. You play by the rules. They hire teams to write those rules. You cut costs. They cut taxes. You look for savings. They look for loopholes. If this sounds unfair, it is, but it's also real, and it's perfectly legal. The system isn't broken. It was never built for people like us. Share this if you learned something new. Subscribe if you want to learn what else is going on behind the curtain. Because the only way to win is to understand the game. It's not cheating. It's strategy. Learn it.